Welcome back. Time now for the Word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President Ryan Payne. Also with us is Dan Geltrude this morning. Ryan, thank you for joining the conversation.
Great to be here, Maria, as
Good
always.
Good to see you. And this AI boom, man, does not want to quit. It's great. We got futures this morning mixed after this record run yesterday. All three major indices hit record highs yesterday at 4 o'clock. And this morning, the NASDAQ is further into record territory, led by chip stocks once again. The NASDAQ's now at 30,775. Now, the other indexes are lower. The Dow down 163 and the S&P lower by 7.25 as oil prices trade up this morning. But take a look at yesterday's close where we hit all major record highs on the major indices. Alphabet this morning is furthering its decline. It sold off 4% yesterday as it announced it's going to raise $80 billion and it's selling stock to do so to fund its AI build-out. The stock was down almost 4% and this morning down another 1/3%. But check out Marvell Technology. What a day it had yesterday, rallying 32.5% after NVIDIA CEO Jensen Huang showed up on stage with the CEO of Marvell and said that Marvell is going to become the next trillion-dollar company. I want to get your take on that, Ryan. What's your take on Marvell?
I mean, that's pretty crazy. I mean, it's only worth a couple $100 billion now. And so Jensen Huang with his leather jacket to bless the stock, and all of a sudden it's up 30%. I mean, this has to be reminiscent of the late 90s. I mean, every day you're hearing about a stock going up 30%. I look at Snowflake last week. You look at, there's just so many stocks right now. Micron's another example of, I've never seen these kind of big moves just on a daily basis. It's just wild, wild behavior in the stock market right now.
In the beginning of the dot-com boom, I remember feeling like giddy because it was like anybody who put a .com at the end of their name would rally huge, and we were laughing at it. I mean, we used to call it annoying little comparisons. Oh, here's the market value of General Motors with all of its huge revenue, and here's Joe Schmo's Pizza Place.com, and it has a larger So I mean, it was so crazy. Is that the kind of giddiness you see right now with AI stock?
I think it is. Look, I don't think the party is over.
Did not end well in .com.
It did not. Now I'm Payne Capital.ai. Now we're not Payne Capital Management anymore. So, I think the point here is you are getting into later stage bull market behavior. And I hear this all the time. I hear strategists saying that, well, we could be in the early innings. I highly doubt that. Now, having said that, I think markets are going to continue to go higher here. There's still too much cash out there. The earnings continue to blow away what the estimates are. But if you think about we keep talking about this big IPO, these three big IPOs that are going to come out, SpaceX, Anthropic, OpenAI, collectively last year, they lost $25 billion.
Wow.
Yes. So I think, everyone's talking about, well, the .com era, these companies didn't make any money. Well, guess what? The three biggest players right now, arguably in AI, don't make any money. So I do think you have to be cautious here. I think this is why I preach it all the time. You want to spread your money out to other areas of the market because this trade is definitely, it's looking a lot like a bubble. And not to say we're there yet, but I do think it's time to be a little more cautious where you're putting your money.
SpaceX reportedly is going to set the price of its deal. I mean, they're not going the traditional route where you actually test the market to see what the price is. They want it at $135 a share, and they want to sell 555.6 million shares. The rocket company aiming for a valuation of $1.8 trillion. But you already have one firm out this morning saying it's worth half of that. The terms of the IPO will get even more terms later this afternoon. It's going to trade on the NASDAQ. Likely, and NASDAQ Texas, the Elon Musk-backed group, also negotiating razor-thin fees for Wall Street firms. They say they're going to pay less than 0.75% for this public offering fees. OpenAI released plans to expand its coding agents in a bid to compete with Anthropic. It also announced details of its IPO. CEO of the ChatGPT maker Sam Altman reportedly expected in Washington today at the White House and on Capitol Hill to talk about President Trump's executive order that he signed yesterday. Dan, your reaction to all this?
Well, I think that we are in the early innings related to what AI's capacity is going to be in the future. I mean, it just seems to me like every day somebody in my office is discovering something new that AI can do. So it's really an exciting time. Now, these valuations, that's another story. Are they ultimately going to grow into them? We'll see.
Yeah, well, look, we also have to consider the fact that the data center build-out has just begun.
Yes.
I mean, that's true. I mean, we don't have all the data centers that, I mean, they're just spending on them right now. And by the way, Microsoft announcing a host of new AI initiatives yesterday, unveiling new coding model, MAI, Code Flash. Microsoft, already a key player in this boom, says there's plenty of economic benefits in providing these in-house models, requiring no payment to other parties like OpenAI. And Microsoft shares this morning are trading this way. How do you parse through who's real and who's not in this boom?
Well, I think this just speaks to there's going to be more competition because if you're Microsoft, you have the AI infrastructure. Instead of licensing out to OpenAI or Anthropic, which they own a piece of those companies, by the way, as well, why not just have their own in-house models and take all that money for themselves? So I think you have steeper competition. You talk about this raise from Google of $80 billion. They need to raise capital for the spend here. That's going to at some point chew into their margins. So I think it's getting ultra competitive. These companies just aren't as cash flow positive as they used to be. Again, I think this is later stage bull market behavior, and this is why you want to be discerning where you're putting your capital. Don't put everything into the Mag 7, into the AI trade. I think just keep screaming that in my mind.
What's your broader play then?
Well, you just mentioned the AI infrastructure play is not over, and that's true. Like if you look at copper is an all-time record high, nickel. So if you think about
how about gold?
Gold's kind of been dead money here, but that's not really an input the same way that some of these other metals are when you're talking about building out infrastructure. So I think anything that's an infrastructure play, materials, makes a lot of sense. You want to have money there. Also, just like I want to own the banks here because they're the ones that are going to be taking these companies public, like J.P. Morgan, Goldman Sachs. They're all going to be
even though they're getting thinner fees.
The thinner fees, but they're still getting more fees, and we also know that's going to open the floodgates to more IPOs this year. And the financials are actually the worst performing sector of the S&P right now. Good time to put some money there.
Totally agree with the capital markets business about to really blow up, explode. Great to have you this morning.
Thanks, Maria.
Always a pleasure to see you, Ryan. Dan, you're with us all morning, and we appreciate that. Quick break, and we'll be right back. Stay with us.